ES put in a huge short covering holiday rally last week. Now, do we retrace or continue on to all-time highs? Get ready for any scenario with this week's trading plan. Now, if you watched last week play out and said, what is going on? Plus 250 points in a straight line. How do we keep going higher? First, you did not watch last week's video. And second, let me break it down for you. Look at where we've been higher time frame. We've been on a steady downtrend, a correction from all-time highs, down about 6% at the lows, off of all-time highs into the end of last week. And for last week's trading plan, we talked about how Friday likely put in a short-term swing low, and we would likely have a relief rally into the holidays last week. And that's because of this setup that we got at the end of the prior week on Thursday. We've been in a correction. We're down about 5% off of all-time highs. Then we get this absolute meltdown day, liquidation, all-day sell for 200 points in a straight line on Thursday. Now, when you see something like that, you know that that's typically indicative of a potential short-term bottom, and then the action on Friday confirmed that, where you have this liquidation day, which is short-term capitulation, and the key is what happens the day after a sell-off like this. Typically, if you want bearish continuation, what you want to see is in the evening after Thursday into Friday, you want to see a relief rally overnight. You want to see the first move to be higher. It's much more bearish to have the first move higher, which then gets rejected by sellers. Sellers reload up at higher prices, and then when we get back down to the lows, now buyers are exhausted, and then we make new lows and see continuation down into the 6400s. Instead, what we saw on Thursday night was the first move was lower, which put in kind of that little short-term capitulation. So the evening after Thursday, we actually went lower, and then late shorts were trapped into the lows, and then we ended up putting in a failed breakdown of the October 10th low at 65.40, and then on Friday we started that relief rally higher by reclaiming 65.94. So you got a liquidation day, then you got the first move down and late shorts trapped into the lows, then you put in a failed breakdown and started this relief rally. So this week's trend move into Thanksgiving was actually started on Friday. We initiated that by putting in the failed breakdown of 65.40, then reclaiming 65.94, started that rally on Friday, and this week was all just continuation of that relief rally that started on Friday. We talked in the plan for last week that clearing above 66.72 would likely see continuation of that rally that started the prior Friday. That would take us into that key supply area between 67.02 and 67.20. And really this was the key moment from this week. If this was going to put in a lower high, sellers needed to defend this area at 67.02 and 67.20, which was the reclaim of this trend line of higher lows. And if they were going to prevent continuation, they needed to reject this and then work back down towards the Friday range. Instead, buyers were able to base underneath this and clearing 67.20, then allowed for that next push up into 67.96, which had been that prior ceiling for multiple times throughout November, and clearing 67.96 allowed for continuation into 68.50. So sellers dropped the ball, were unable to defend the back test of this area, and we saw progressive short covering once that 67.02 to 67.20 area reclaimed. Now, this was a pretty ridiculous trend move this week overall. However, if you zoom out and look at the structure, it was fairly textbook. Rally on Friday, base, rally, base, rally, a little liquidity grab underneath 66.39 to start the week, which gave you fuel for the upside. So, you see this, when you're in this trend mode and momentum is very strong to the upside, you've had a correction off all-time highs, you've had a liquidation, you put in a failed breakdown. Now we're in short covering squeeze mode into a holiday week. You don't want to be stepping in front of this with shorts, but you can see how we had rally, base, liquidity trap, rally, base, liquidity trap underneath 67.02, which fueled the upside again. So more shorts trapped, then you clear 67.20 and you get that move. And once we cleared 67.20, really from then on, just almost no dip directly into 68.50. If you were day trading this week, a little bit difficult. Like I said, you don't really want to be trying to short this kind of momentum. You don't want to be trying to step in front of this momentum with shorts. But also on the long side, there were just very few opportunities for new long entries. We had the failed breakdown of 66.39 early. We had the failed breakdown of 67.02 on Tuesday. And then once we cleared 67.20, virtually no buyable dips for new long entries. So really, you just had to get long on the few dips that we had and then try to hold runners as long as possible. And then again, just to zoom out and show, the structure here, this was basically a completed rotation where back here all the way on November 12th, we failed 68.50, this little low time frame demand zone here. So we had bounced twice, then we failed 68.50, which saw continuation of the correction down from all-time highs. And now the liquidation on Thursday of the prior week, and then last week's rally is the complete retracement of the failure of 68.50. So that's a completed rotation, and now we see, can buyers step in on any retracements, or can sellers defend and try to work this back down and retrace some of last week's rally? So what does this mean going forward for the coming week especially? This is likely to be a very difficult week. Coming off of a rally like this, where you don't want to start front running the pullback or saying that we have to retrace and trying to short this, but it's also difficult to take new long entries after a 250 point rally from the lows. So likely going to be a good week to be very patient. Now, there are many possible scenarios. A lot of people are going to be talking about that, of course, we're going to retrace this. Normal volume comes back after the holidays, new month flows start, and we're definitely going to retrace, and it's time to short. So you want to avoid thinking like that. While that's certainly possible, there's certainly no guarantees that happens. When ES is in squeeze mode like this, it can continue to go higher for much longer than anyone thinks. So don't try to predict too much this week. As always, it's going to be very key to focus on reacting to what price does at key pivots instead of guessing what's going to happen. The main thing to watch for this week, if you're expecting to see some sort of retracement, we won't retrace this rally until some supports start to fail. So we'll watch what happens on the back tests of some of these key pivots. And if we don't see buyers fail on some of the back tests of these pivots, if we don't see some of these supports fail, then ES can certainly continue to consolidate or recharge on small dips and continue this trend right into all-time highs. So for next week, the key pivots will be 69.02, 68.50, 67.96, and 67.20 to 30. Now next week could certainly take many different paths, but basically seller's objective would be to see higher time frame, to see failure of 67.96 for any real retracement of the rally for a back test into 67.20 to 30. So they'll want to defend 69.02. Eventually they're going to have to hold below 68.50 to get rotation down into 67.96. And then the real retracement of the rally doesn't start until 67.96 fails, is rejected on a back test, and gets the full rotation back into 67.20 to 30, which you can see was that consolidation and breakout point from Tuesday, which really put the rally into that final stages directly into 68.50. For upside, buyer's goal next week would be to defend 67.96, potentially a failed breakdown below this Wednesday low at 67.87 that then reclaims 67.96, flips that to support, continues that rotation up into 68.50. In order to see continuation to 69.02, buyers will need to be able to clear and hold above 68.50. Now let's talk about the trade setups for next week. On the long side, the top watch for me would be that failed breakdown of the Wednesday low at 67.87. I would definitely be watching for a failed breakdown on any traps below that reclaim, especially that reclaim 67.96 for rotation back up into 68.22 and 68.50. I would also watch, if we do get that failure of 67.96 and we do get more of a retracement, I would watch 67.20 to 30 to hold. I think that's a good back test spot to try longs for that rotation back up into 67.96. Then finally, if we do get a larger retracement of the rally from last week, watch 66.72 to hold, or a failed breakdown underneath the 75 low from Tuesday for a move back into 67.20 to 30 and potentially higher if buyers are able to clear this 20 to 30 area for a full rotation back into 67.96. On the short side, you can watch for, if we get direct continuation early in the week, directly into 69.02, I do think it would be more bearish to test higher first into 69.02 early in the week. I think you can watch for rejection there for a rotation back into 68.50. Another short setup, if we do end up getting the failed breakdown of 67.87 that then rolls over, especially if any spikes underneath 67.96 that get rejected or reoffered on the back test at 67.96, you can look to be short for that retracement back into 67.20 to 30. As always, the best thing to do with these key pivots and these trade setups is always focus on reacting to what price tells us at these key pivots. See if buyers are able to step in on some of these back tests, and don't fight the trend and start trying to front run the pullback this week. That's what I'll be watching for on ES this week. If you'd like to trade with real pros live every day, join us at Trade with Insight.